Well, good morning, and can I welcome everyone to this, the 11th meeting of the Public Audit Committee in 2025. Agenda item 1 is for committee members to decide whether or not to take agenda items 3, 4 and 5 this morning in private. Are we all agreed? We are agreed. Thank you very much. And agenda item 2 is further consideration by the committee of the National Audit Office's report on the administration of Scottish income tax for the tax year 2023 to 24, along with the Auditor General for Scotland's assurance report. So can I welcome our witnesses this morning who have joined us in the committee room. First of all, Alison Stafford, who's the Director General at the Scottish Exchequer, and alongside Alison Stafford is Lorraine King. Good morning, who's the Deputy Director, Tax Strategy, Engagement and Performance at the Scottish Government. We're also very pleased to welcome back from HMRC, Jonathan Athau, who's the Director General for Customer Strategy and Tax Design at HMRC, and alongside Mr Athau is Phil Batchelor, who is the Deputy Director for Income Tax Policy at His Majesty's Revenue and Customs. We've got questions to put to you. Before we get to the questions, I'd like to invite Mr Athau and Alison Stafford to make short opening statements, beginning with Alison Stafford.
Okay, thank you very much. Thank you very much, Convener, and good morning. It's now actually close to 9 years since Scotland was granted the fiscal powers to vary tax rates and bands for non-savings, non-dividend income tax. In this period, the Scottish Government and HMRC have worked closely together to ensure the smooth administration and collection of Scottish income tax. In 2025-26, this tax is forecast to raise £20.5 billion. The National Audit Office and Audit Scotland continue to assess that HMRC has adequate rules and procedures for Scottish income tax, and I am assured by this. Since the session in April last year, further work has taken place to strengthen the position, particularly in 3 areas where it's been important to continue to safeguard Scotland's tax base and receipts. I'll take each one in turn very briefly. Firstly, on compliance, the Scottish Government and HMRC's joint compliance group works to be assured of HMRC's view that Scottish income tax compliance risk is low. It tests interventions for both impact and value for money. Secondly, an additional third-party data clash exercise, which scans the details of Scottish taxpayers against third-party data sources, has corroborated HMRC address data for between 98 to 99% of Scottish taxpayers. We're assured by these results and will fund HMRC to actually repeat this exercise again in 2025. Thirdly, on the completeness of S-codes, HMRC has undertaken additional work on identifying those employers and industries who are continually failing to apply S-codes correctly. HMRC is contacting these employers to correct the issues and fully understand the reasoning behind this, and I'm sure Jonathan will say more on this during the session today. Finally, whilst not directly related to the administration of Scottish income tax, the Scottish Government published its tax strategy alongside the 2025-26 budget. This sets out a clear policy intent for income tax for the remainder of this Parliament and commits to continue to evaluate the impacts of policy decisions as data becomes available. Obviously, any insights from the committee, either today or in subsequent sessions, and I know that Audit Scotland are doing a further performance audit this year on tax and fiscal sustainability, and obviously we continue to welcome the insights from the committee. Thank you very much.
Thank you very much, Ms Stafford. Mr Athau.
Thank you, Mr Convener. I will say three things. I'll try not to repeat what Alison has said, but very much agree with her statement. Firstly, I very much welcome the audit reports we have. I think they do give us confidence in the operation of Scottish income tax. Secondly, I would echo we have very close working relationships with the Scottish Government. This is important and remains important, particularly as that tax evolves and changes. We have the advanced rate that was introduced in April 24 as part of that constant change in policy, and we work together to make certain those policies are implemented carefully and appropriately. And lastly, I would echo that the issue of compliance remains very much front and centre. The compliance working group we've established is there to make certain we're on top of the issues here. Some of that is around addresses. Some of that is around wider aspects of non-compliance in the income tax system, and I'm very happy to talk about any of those later. But those, I think, are 3 points that I think are a really important basis for our conversation.
Thank you very much indeed. Thanks to both of you for that. So can I ask you in turn, do you accept the key messages which are contained in the Auditor General's report on his inquiry into the NAO audit of the Administration of Scottish Income Tax? Do you accept the key messages which are contained in that report? Alison Stafford?
Yes, so obviously the messages that are around the National Audit Office findings, obviously both the Auditor General and ourselves need to rely on the National Audit Office producing the account as set out. So, so yes, I think we have to place reliance on the NAO work, and it's always good to see that's endorsed by the Auditor General as well.
Thank you. Mr. Arthur?
I would have nothing to add. I think we're very happy with the auditors and the way they've carried out their work. I think it's a very fair summary of the situations. It does highlight areas of risk, but I think those are areas of risk that we need to be alive to. So I think there's nothing I would disagree with in anything that's been said. Yeah.
And you've already talked to us this morning about additional assurance, more checks and so on. So that is part of your work programme built in anyway, isn't it?
Very much.
Right, thank you very much. Can I just then turn to the vexed question of estimates and adjustments which take place? So there are, when we're looking at the income tax revenues for 22-23, I think there is an estimate of to cover about £1 billion worth of tax revenues, and that's out of a tax take that year of 15 billion. So that, I think that seems to us to be, on the surface, quite a high figure. Is that the kind of level of estimate and adjustment you would expect? And is it an apportionment of the UK figure just kind of transposed into the Scottish context? Or to what extent is there an adjustment made for the profile of taxpayers in Scotland?
There is always going to be a degree of estimation in our figures. In some cases, even though we are talking about 22-23, some of the things that are needed to happen for us to finalise those figures have not yet happened. When there is late payment, and we do see debt and late payment in the income tax system, that obviously means we've not got that money yet, and we have to make adjustments sometimes for money that has not yet been paid over. What I think we have done is, where there is uncertainties and where there is estimates, as far as possible, the direction of travel we have taken, and we are increasingly doing so, is to use Scottish-specific data to make those estimates. And when I say estimates, they are based on often historic patterns of what has happened in Scotland with Scottish taxpayer behaviour. So that is what we would like to do. In some cases, that is not always possible. So one area where we can't make full adjustments is gift aid, because the way we ask charities to collect the information for gift aid, we do not always ask them to provide the address data. So we will know that there is a deduction to be made, but we will not always know how much of that deduction is for Scottish taxpayers versus rest of the UK taxpayers. So there are some limits, and as I said, sometimes those limits are in there for good reason, because we don't wish to put burdens on charities in terms of compliance where we don't need to. But as far as possible, our aim is always to use Scottish-specific data. This is an evolving agenda. As technology changes, as our IT systems change, we might get more data and be able to do more of it. But our direction of travel is always, where there is existing data on Scotland or Scottish-specific taxpayers, we should use that data. So that's our direction of travel. But there will always be an element of estimation in here, given the nature of the income tax system, given the behaviours we see from taxpayers.
Okay, and when you have estimates and adjustments particularly estimates. I mean, do you go back retrospectively and check how accurate those estimates were and set them alongside the actual outturns?
Yes. Methodologically, we will always look to see where our estimates either optimistic or pessimistic, and does that need to change now? You won't need me to tell you that often there are a lot of factors affecting tax receipts. So sometimes it is the sort of behaviours I'm talking about, but it can sometimes be wider economic factors, and that can make some of those adjustments more difficult to do. But we will always look, and we will always try to be transparent. And I think part of the audit process is also about being transparent about our methods and how we look at them and adjust them in light of those outturns.
And just on the transparency point, Mr. Arthur, so do those retrospective digs into where you had made estimations and adjustments in previous tax years, do they then become published information?
There's certainly, often as part of this audit process, that will drive out those that estimate. I don't know if we do a particular bottom-up analysis of each of the assessments, but again, we could easily provide that to the committee as part of our regular updates to you in terms of assessing the reliability of our estimates. Bearing in mind, sometimes it might take many years for the absolute final figures to be established.
Yeah, no, we understand that. Okay, I'm going to now invite Colin Beattie to put some questions to you. Colin.
Thank you, Mayor. Perhaps you can first off, I'm looking to HMRC here, help me with a figure which I don't think has actually come out. We've seen evidence that more people are coming to Scotland than leaving in physical numbers. But what is the aggregate value of tax gains or losses comparing the inward taxpayers to the outward taxpayers?
I don't have that information in front of me. I'll check and see if there's anything in my pack, but I've not seen that. But yes, you're right. What we are seeing, or the information we've published so far, has been there is net migration to Scotland, and therefore we are seeing, other things equal, more taxpayers in Scotland. Obviously, there will be some people moving the other way, but I haven't got the exact figures on exactly how that plays out in terms of...
If it was possible to get these,
yes,
it'd be really helpful.
Yeah.
Just moving back to estimates and so on, it's something that's exercised this committee and me for a number of years. And there seems to be a difference in approach here between National Audit and what HMRC are saying. Now, it's in the nature of being an auditor that you always approach things from a more negative point of view, because that's the job. But in our February evidence session, the Comptroller and Auditor General noted that when it comes to the outturn calculation, our exercise shows that we can take material assurance on the accuracy of the figure, most of which is based on actual records of Scottish taxpayers. However, while we have our current systems, an element of it will always be an estimate. Reducing the uncertainty even further will require significant investment in more accurate Scottish data, significant investment. Now, it's obviously a concern that we get accurate figures. Now, I'm not saying whether that would be a gain for Scotland or a loss for Scotland if we did have accurate figures, but accurate figures are really important if you're going to plan ahead. If additional resources were available to invest in more accurate Scottish income tax data, where should that be prioritised? Where do you see as the biggest result area? I would say there are a
number of areas where I think we should be investing. One of the areas, and I think we might come on to this later, is making certain we have all our data on a single system, or more readily accessible on a single system. So at the moment, we have a PAYE system, which collects lots of tax from employees, and we also have a self-assessment system. That self-assessment system is quite old, and when we need to do particular bits of analysis, we often have to bring that data together in different ways. And that can be quite challenging because you're essentially taking data from different systems, putting them together. Sometimes there are some challenges with that. But actually the key issue there is the underlying system, because we would like an IT system that automatically joins up that data, because that's better for everybody, a taxpayer. It means that if a bank or building society sends data to us, we can automatically put it on your record. So it's those sorts of things that will allow us to improve the system. And that is not just about, this has a number of benefits. You're absolutely right, it could improve the accuracy of our data that we publish here, but actually it would make life easier for taxpayers because they would know all their information is in one place and it's all reconciled. So those are the sorts of challenges we face as an organisation. And we have got plans, we have a spending review to come in the summer, but we do have plans to improve our income tax platforms, our IT systems, and that would allow for both improved outcomes for customers and better data. But there are going to be some limits, as I said, on gift aid. We've designed a system that doesn't allow us to fully accurately reflect Scottish taxpayers. That was done for wider reasons in terms of reducing burdens on charities. So there are going to be some limits. But I think the key thing is investing in our underlying systems, because the better the underlying systems, the better the data, and also the better the experiences for the taxpayer.
What you've described is obviously a UK-wide issue that you're addressing, and as part of that, we might benefit in Scotland by more accurate data. So there's two different levels in this, really, in terms of improving information. There's the overall UK improvement, and there's potentially the Scottish level improvement. In other words, what the Scottish Government might or might not be prepared to invest into getting better data. Mm. If the Scottish Government suddenly won the lottery and got some money that was able to spend on improving the data, where would you suggest that would be the most productive?
So I think some of the things we're already doing, so investment, for example, in the address matching exercise, that is a really important, and we are going to be investing in that. So I think there are some areas such as that, but actually in terms of IT build and those sorts of issues, I think actually a lot of the benefit will come from the changes to the UK-wide system. At the moment, there are not areas, I think, where we the data exists, but we are not using it or planning to use it. It is more just making certain that the pool of data is wider, and the main way of tackling that will be UK-wide. So I can't see a particular area where I would say invest in our IT systems and Scotland would, or the Scottish Government or the Scottish Parliament would have better data. It is doing the things we are doing. Maybe as part of the compliance work, we will find some additional needs around that. But I don't think, again, that wouldn't be about new IT systems or changes. That would be about using data we already have more effectively. And again, there's no limit to what we could do there. You know, we have gone from what was every 2 years doing this data exercise, the address matching exercise, now to doing it on an annual basis. And we will need to be quite responsive. There are risks here in terms of non-compliance, and we need to be on top of those. So those are the sorts of issues we'd be working on, but they are not, it's not sort of, you know, here's some money for a new piece of IT kit. It's about how do we invest at the time of our analysts to best produce, and the analysts you've met, to best produce the data and the analysis that can give you a best understanding of what's going on in Scotland.
Alison, I think you wanted to come in.
Yes, if I may, Mr Beattie and convener. I thought it would be important for me to say a little bit about how I am responding to so many things, as you described, our estimated figures. The information that's actually in the NAO report, I don't know if you have it in front of you, but if I give you the reference, you would be able to look at it maybe separately. It's on page 12, and it's figure 2. And because when I was reading the report, and much the same paragraph as Mr Beattie has referred to, which is paragraph 1.5, when I saw that figure that the convener mentioned at the very start about the total amount of estimates, I really obviously wanted to investigate that further. So on figure 2, what I have looked at here that I do take comfort from is that the National Audit Office, out of a total of income tax in Scotland being collected of 15,169,000,000, 15,187,000,000 is based on established amounts, absolutely confirmed, assessed and collected either through the pay-as-you-earn system or the self-assessment system. So the fact that it's such a large proportion of the actual outturn is based on actual tax liabilities individuals have needed to then pay. And the estimation is predominantly coming in what has changed the actuals to the final outturn, which is an adjustment on this table that's showing 17 million. I think actually it would be 18 million, but there's some roundings in there. So the National Audit Office has added up all the various elements of estimates. But as you can see from that column, many of them are netting off each other. So the fact that such a large proportion of the outturn is actually established liabilities gives me a greater level of comfort that the tax that we expected to be collected has actually come through. And in the estimations, I am heartened by the fact that because we now have a few years of tax activity in Scotland, HMRC, when they are needing to do some proportions and some estimations, are actually, at least as Jonathan said, using some areas of Scottish historic trends to be able to apply those to this particular year. So that first number that you read out is striking, and that's why I thought it's important to say that when you actually look at it, it's pluses and minuses, many of which are cancelling out. And I agree with Jonathan that some of the areas like gift aid, I think the burden that there would be on charities to actually have to collect for every time someone is gifting something, have they got an S code or not? And the accuracy of that, I suppose, is something that we would need to work through. But that's part of the deductions from revenue, which is one of the sort of larger changes there. 394, gift aid is included within that. So I just really wanted to say that I think it's really important we look at those established amounts, understand that the estimates are in some of the things that are adjusting that. The last point is just to also say that the Scottish income tax is really what you would call a partially devolved tax. So we are relying on the UK system because all the elements of how income tax work, and obviously Jonathan would be more expert at explaining these elements, but whether the income is coming from sole traders, whether it's from people on PAYE, all of those, and the allowable expenses, the things that happen as to whether you get married couples relief, all of those things, all of that has to be administered because all of the reliefs are part of the UK system. The element that is devolved to Scotland is tax rates and bands. So the overall calculation of what is the tax liability relies totally on a UK system because those rules are UK-wide. And it's then the specifics as to how the rates and bands apply to anyone that is designated by very specific criteria as being a Scottish taxpayer. So I hope that sort of gives you a sense of the fact that we both also scrutinise these things that come through. And we also need to be, and this is why I said in my opening remarks, we test where there is impact for improving compliance and also the value for money as to what can be achieved by that.
I think what you say emphasises my concerns that the NAO report comes across showing so many estimates, so many projections, so many UK-wide calculations which include the southeast of England, which of course distorts any figures for any place else. And we are relying on these figures to calculate out the Scottish rate of income tax. And if you look at the NAO report, you would say, my gosh, there's so many areas here that are actually quite weak. But when I speak to HMRC, when I speak to yourself, you give reassurance that it's in fact not quite as drastic as it would appear in the NAO report. Would you agree with that?
I think that's fair. Yes, because of the fact of the 15 billion that is collected, the very, very, very vast majority of it is absolutely calculated, established liabilities from PAYE and self-assessment. And I think that's the thing that I continue to look at. I've looked at this over previous years as well, and there is still the vast majority of the tax that's due to Scotland is calculated using the PAYE system and self-assessment, and that gives a strong foundation.
Now, we're very reliant on the UK systems here, and
Totally.
Jonathan was talking about the need to upgrade and to modernise the systems you've got. Now, to be blunt, last time you tried to do that, it didn't work so well. I can't remember how many billions you wrote off on that one. So what's the prospects of getting the money that you need to drive these changes, which clearly, for the whole of the UK, not just for Scotland, are going to be beneficial?
For some elements of that will be dependent on the spending review. We think we have a good case for additional investment, but obviously that will need to be played out through that process. But there are some investments we're already making. So we have a programme called Making Tax Digital, where we're going to be asking self-employed people to use software to keep records and to update us on a quarterly basis as to what's going on in terms of their income and expenses. That is part of our programme of modernising our IT. We're already starting a testing phase of that. It launches properly in April 26. So we have the money for that. That will both as well change how people interact with us, but behind the scenes, we're rebuilding our IT systems onto newer platforms. So some of that change is already happening in income tax, particularly focused around the self-employed, and it's self-assessment, which has the slightly older system, which is the focus, and some of that is already happening. We're hoping to do more of it, but the final outcome of that will really be dependent on the spending review. And yes, there have been challenges in some of our delivery of some of our tax system, but we also have records of achieving good changes. Making Tax Digital, as I said, is coming along. We've already done elements of that for VAT. That was very successful. So we're confident we can make those changes. But it is a very large and complex system. We do have a very large and complex IT estate. As Alison has said, if you look at the calculation for income tax, yes, it's your income, but there are lots of deductions, allowances. We have a quite extensive set of those allowances, all that need to be built into the calculation. We bring in some income some income tax through PAYE, some of it through self-assessment. So there are challenges in the way we operate the tax system that does mean there are complexities. So it is always a challenge to make those changes, but we think we're confident we can do should we get the funding.
Okay, let me move on. There's a service level agreement between HMRC and the Scottish Government, and I'd like to ask you a daft question to start with, and maybe Alison can answer this. On the page that's headed purposes or purpose, there's reference here that the Scottish Government is required to meet any net additional costs. Can you define what a net additional cost is?
It would be taking into account, in effect, what we're already paying. So we know our costs each year are pretty flat, actually, at 0.6 million, 600,000. And it would be if there are particular changes that are ever required in the delivery of the collection of Scottish income tax, that it would be just the increments that are incremental costs, the net additional costs that might be required to assist the delivery of that. So obviously the most recent example is bringing in the advanced rate in 2024-25. That included some build costs of bringing that in. And then it will move to what you might call more of a steady state, business as usual. HMRC with Lorraine, who is actually on our Scottish Income Tax Board with HMRC, will work through, well, what are the ongoing incremental costs, the net additional costs that might come from that. I'm expecting once we've gone over this build phase, and obviously we've had that implemented during 2024-25, that will need to sort of follow through. There was obviously something fairly recently that will have to have been built, recognising that pretty soon people will be starting to do their self-assessment returns, hopefully nice and early. I thought I'd do the plug for you. So that's been a more recent build that will have happened now, so that people, once they get to the end of the tax year, those that have to do a self-assessment return can start to fill those in. But once we've got past that, we will then assess whether there is a net increase that's required at all to the business as usual costs. We're expecting it to be negligible, I thought I would mention, but yeah.
So if I could just perhaps elaborate on that. Essentially what we are, what the cost of the Scottish Government is compared to what would have happened if there had been no devolution of income tax and we had maintained a single UK-wide system. So what is the cost of sometimes making changes, as Alison said, implementing a new tax band, but what is the ongoing cost of having Scottish-specific rates of income tax? So that is the net cost. So it's not the sort of cost of the income tax system in total divided by, you know, the share for Scotland. It's the incremental cost of operating the Scottish income tax system as we do. So that's what we charge. That's the approach we've taken, and whether that's the ongoing costs or the costs of change, it's the same method, the same approach. It's only the incremental costs that the Scottish Government bear the costs of.
So looking at the service level agreement, I'm struck when I look at the service requirement, the overarching aims. These overarching aims don't have any flexibility in them. It's, HMRC will identify the Scottish taxpayer population. It will collect the correct rates of SIT. It will account for the amount collected. It will continue to administer income tax. All down here, there's a couple of pages of it. Some are stronger than others. It's a definite commitment on the part of HMRC. Now, we've just been talking about all the estimates and the workarounds and so on that are being used. Is there any intention to revisit the SLA?
So from my perspective, the SLA is there to make certain we are accountable. And I don't apologise for having quite strong language in there about what our purpose is and what we are here to do. That would be, if I was talking at a UK-wide level, it would be the same principles. We are here to collect the tax that is due under the law. That is our aim. We are here to collect the Scottish income tax due under the law and make certain it's accounted for to the Scottish Government. That is our purpose. So I want us to be held to the highest standards in doing that. And as I said, we are always trying to make certain we improve in what we do. So the aims and the purposes, I think, should be there and should be absolutely unambiguous. We should not, it's never likely that we're going to get every penny absolutely right, but we should always aspire to be as accurate and as we can be. Of course, the SLA should change, as our relationship between the Scottish Government and HMRC changes. We are putting in place new arrangements, such as the Compliance Working Group. Things will have to change in the SLA, but I think the overall aims of what we're here for are really important, and that's what I and my department should be held to account for.
So just to clarify on that point, there is an intention to revisit the SLA?
Sorry, Alison.
Yes, no. So the SLA is reviewed annually, but we will still be absolutely wanting to hold HMRC to account to deliver to the maximum of their possibility and to keep our tax collection as robust as possible. But it is reviewed annually, and let me just give you some examples of when we have agreed some very specific updates. So in 2022, there were additional data asks that we required. In 2023, we added in some very specific things around confidentiality agreements, and that was particularly pertinent when there was a desire to bring in a change at the advanced rate tax band. Obviously, all the preparations have to be done before that can be announced to know that there is confidence that it can be delivered operationally. So confidentiality agreements were brought in so that HMRC could actually gain advice ahead of formal announcements here so that the operational work could be tested. That's not unusual for tax authorities to do that. And then in 2024, the wording was reflected to actually say about this joint working group on compliance. There's been a compliance plan agreed with HMRC for a number of years, but it was actually about having the right people convened, and it's not just the people that that you see around the table here today. It's actually drawing in to subject matter experts from HMRC to join the work that actually those that are supporting the devolved arrangements could take place. So I think the key thing around the SLA is that there's vigilance about ensuring that it still holds HMRC to account, but also is flexible and adapts to the particular needs that our circumstances here require. So it's more of an annual refresh scrutiny that it's actually doing what it needs to. So hopefully that goes some way to illustrate the work that happens.
Thank you. Just one last question. It's about the impact of tax divergence. The Comptroller Auditor General in his reports said that one of our big critiques of government generally, including HMRC, is the surprisingly low level of investment in evaluation of the impact of different policies. Now, does the Scottish Government actually have enough information about the impact of its tax policies to make informed choices in the future? And maybe, Alison, you might want to comment on that.
Yeah. So Scottish income tax is still relatively new, but the thing is that we have been really at pains as soon as there's been particular changes to be able to assess those. And we use a whole range of different elements to support in providing advice to ministers about the potential impacts of policy preferences. Clearly, there are tax policy differences and they are raising more funds here for us in Scotland because of the progressive preferences that there are for the tax system here. But there's actually been a number of exercises that have been done to actually make sure that we are continuing to get the data to find out what that is telling us about our tax policies. So there's 4 key evaluation studies that have taken place. And if I take them in the sort of most recent ones first, last April, you'll probably remember, just as we were having our evidence session with you, HMRC published 2 data sets. One was a longitudinal data set that was to do primarily with migration. I can say a little bit more about what that covered. There was also another one which was looking at extensive taxable income elasticities. So that, again, is another aspect of behaviour. And there was also particular studies that were done back, one by HMRC, that was looking at the more material change that took place in 2018-19 when the Scottish Government introduced a 5-band tax system. And we also did our own Scottish Government analysis on migration and that was in December 2021, again to evaluate the 2018-19 tax changes. You do need to allow a bit of time, as I say, because of self-assessment. There's further time for the results to come through. What the longitudinal data set, which was to do with migration, showed was that since devolution of income tax, net migration into Scotland has increased each year. And in 21-22, which is the most recent data set that we have, the net migration was positive across all tax bands. So that's, I think, the key point from that one. In terms of the other study that was, again, published last year, it found there was no evidence of changes in labour market participation. This particular study was also peer-reviewed by the Fraser of Allender and the University of Westminster. So there was particular things, and I can go into any of these in more detail if you wish. The one that goes back to those changes from 2018-19, HMRC's study there actually matched a cohort of taxpayers in Scotland with a control group in the rest of the UK. They concluded that there was some limited evidence of Scottish taxpayers lowering their taxable income, so some element of behavioural change, but nothing that was particularly talking to migration. And then in terms of our analysis in December 2021 that we published, that was actually showing that there was no evidence of significant behaviour change. So I think the key thing is that we stay vigilant in tracking all of these things. These are the evaluations that we have. The other thing I would say is that I mentioned at the start the tax strategy that's been published. One of the things that's in there is actually setting out a full set of areas of research interest. That was based on the conversations. There was quite a lot of different groups that the government engaged with in putting together the tax strategy. Over 65 different groups and individuals that were engaged with. And the areas of research interest are published, are the things that we're interested in. We have set aside a modest amount of money to be able to support and fund areas that may not be the usual suspects that will do this sort of work. And we will continue to get the results in from those so that we have that to, continue to scrutinise, test the impact of the various policy choices that ministers have made over a number of years now.
From what you're saying, there's a lot more going on than this committee was aware of. We obviously go by what NAO says, and NAO is unequivocal about the low level of investment into these evaluations. Why is that? Why is there, again, the information from NAO seems to be pointing in one direction. What you're saying is there's a lot of other stuff going on. Do NAO not have access to that information?
Yes, succinct answer to that question.
So the short answer to would NAO have access to that information? Yes. Yeah. And any auditor that comes to, whether it's Scottish Government or any other departments within Whitehall, it's very much our well, I can speak for myself, but the information that is requested is provided. And these are published. These are actually in the public domain. So it's not that it's something that we're holding that other people don't see. This is published data.
Okay, thank you very much. Can I just take you back to one of your former answers, which I think will be of interest to the committee? So you mentioned that when the government was contemplating introducing an advanced rate of tax, a new tax band, you signed a confidentiality agreement with HMRC and you set to work. Did you set to work on looking as to whether that was feasible, or did you set to work on setting the systems up?
So it would be about feasibility.
Okay.
So it was just to know that operationally, of which the expertise is with HMRC, that it was actually a feasible situation.
Yeah. Okay. And I mean, presumably there's no question but that the answer would have been that it was feasible.
Maybe Jonathan should come in.
The key question is often timing. There is often a lot of changes going on our IT systems, and we need to work out, is there a sort of, we need to understand what is the work required to introduce a new tax band, and how long that will take. Can it be factored into our existing plans? So, therefore, our advice would be to the Scottish Government, you need to announce it now to come in at this particular point. It would be those sorts of questions.
So in the tax year, if we're looking at the year 23-24, which is when the higher rate I think came in, the advance rate, okay.
There's so many different labels, you have to get them right.
Well, okay, I'll do my level best to get things right. I mean, so the advance rate comes in. The advance rate is not agreed until February at stage 3 of the budget process in the Scottish Parliament of 2024. When does your system have to be set up? I mean, is it too short notice to set it up between February and the 6th of April?
It would be too short a period. So we need to work with the Scottish Government to understand when an announcement is likely, and once an announcement is likely, that is normally when we would start the preparation work for the implementation of new rates.
But just to be clear, Mr. Arthur, when would you start that preparation work? When did you in that example?
Said, when we obviously actually doing the feasibility work actually helps you understand kind of those sorts of things. So that feasibility work started before the announcement. We then, once the announcement has been made, we would then talk. And
sorry, when you say the announcement has been made, do you mean at stage 1 of the budget process, yes, or at stage 3 when the Parliament has agreed to the budget?
At the announcement would be the
stage 1.
Yeah.
So at the draft budget, when the draft budget was set out.
Okay.
So in that case, that would have been a date in December.
Yes. Okay. So it would be the December date. An announcement is made. Sorry, I'm using our language rather than. An announcement is made on a government intention to introduce that rate. We would then start that work. Pretty much, or immediately afterwards, we would start the IT work. But obviously, we're drawing on some of the work we've already done. So it's not you are starting from scratch. You already, because of the feasibility work, you know what the challenges are and kind of how that would be sequenced. But again, the delivery would need to be factored into other things that are going on at that time to build up for the start of the tax year.
Okay, but what if Parliament had rejected that announcement? Because the governing party doesn't, although it had a coalition at that time, but necessarily doesn't have a majority. If Parliament decided it didn't want the advanced rate to be introduced, yes, for example, or wanted a variation of the advanced rate,
yes,
how would you cope with that?
So in that, it's difficult to sort of know on hypothetical scenarios because it would be you'd have to look at it. If it was decided there was never going to be a rate, could we suppress it in our IT system between a decision in the Parliament and that coming forward? The other issue with income tax is obviously income tax is an annual system. So you can make changes, though we try not to do it. We have done it in the past. You can make changes within year. So you might start the year with that being built into the IT system, but then you could take it out during the course of the year. So at the end of the year, the tax collected was fully in line with Scottish legislation. So there are options for doing that. But again, this is a conversation we take with the Scottish Government about how it wants us to proceed, given the timetable for announcements. It's not a decision we make unilaterally. We talk with the Scottish Government about the best way of planning that, particularly in the run-up to changes, significant changes, such as the introduction of a new rate.
Okay, thank you very much for that. Graham Simpson's got some questions for you. Graham.
Yeah, thanks, convener. I think what the convener was getting at there was obviously when the government, the Scottish Government, first announces its intentions on tax, you start work. But the convener was really, what he was getting at was when the final decision is taken, if that is different to what was originally proposed, and you've done all this preparatory work, how quickly can you turn things around, change what you've done?
It would really depend on the nature of the change. Of course, you know, if I look at something I'm more familiar with, which is sort of UK legislation around finance bills, sometimes there are changes that come out of that. Sometimes they're often minor, so they don't have particularly large impacts and can be managed. As I said, if there was a decision that the advanced rate was not going to be implemented, and we were just going to stick with the five band system, that would be quite a big change. And again,
that would be a big change.
That would be a big change to make a decision. If a decision was made in February to not go with a rate to begin in April, that would be a very big change. We would have to do some very quick work to understand what we could do to address that. There are sometimes changes we can make behind the scenes. So an employer or a taxpayer would not see the fact that actually there are 6 bands, but we've just suppressed one of them. So it looks like there's 5 bands. There are different ways of doing that. But as I said, the key thing for tax is making certain you are right at the end of the year.
Yeah.
So it could be, if you wanted to do that, you would start the year with 6 bands, and then by the time you've got to the end of the year, you would have reinstated the 5-band system, and the reconciliation at the end of the year would have made certain the Scottish Government got only the money due under the law, and taxpayers were no better or worse off than that. But this is a challenge with all IT deliveries that are dependent on legislation, and also I also understand that the Scottish Government, UK governments, all governments are looking sometimes to implement changes as quickly as possible, and our aim as administrators is to make certain we're as flexible as we can be to meet those particular needs. I don't think it really is very credible to say, it's going to take us 15 months to implement a new rate of income tax. We do need a few months to do that. But obviously, with legislation, with Parliament, Parliament is obviously, sovereign in this particular issue, and therefore its decision is final. So there is always a degree of risk in delivery around these things.
Okay. Alison Stafford, you referred earlier to Mr. Beattie about a number of reports which were published in April last year. Now, one of those, an HMRC paper, maybe it's HMRC that should be responding to this. Anyway, you can decide between you. The HMRC paper called Impacts of 2018 to 2019 Scottish Income Tax Changes on Intra-UK Migration and Labour Market Participation. Nice short title. That says, in total, we estimate a loss of NSND, which is non-savings, non-dividend income tax from cross-border migration of £60.6 million. So in other words, £60 million would have stayed in Scotland if tax bands had not changed. I'm correct. Yeah, that's broadly correct. So that's for 2018-19. So have you done any analysis on other years, and has been any analysis about how in future that gap, if you like, might change if the tax gap was to widen further? So
the part of the challenge here, as Alison already said, is it does take a while for us to have a complete data set to be able to do this. We are collecting that data. We've invested in a database that allows us to track people over time. So we will have that data, and more up-to-date projections will be, more up-to-date estimates will be available. Also, we make this data available to researchers, to academic researchers. So again, it doesn't have to be just us doing the work; others can do it. In terms of the overall estimates, the best way of looking at that is I think would be what the Scottish Fiscal Commission have done. They have something called a taxable income elasticity. So this is how much does taxable income change as tax rates go up. Now that encompasses a whole set of behavioural assumptions. Some of that could be migration within the UK. Some of it could be people, for example, deciding as higher rates, maybe I'll bring forward my retirement a little bit, because actually, you know, the marginal benefit of me working a little bit longer is not there. So that will include that. So those estimates that the Scottish Fiscal Commission make in terms of additional yield will include those estimates, but they won't be broken down between how much of that is migration and how much of that is other behaviours. We will only be able to see that in future, and it will take a while for all that data to come together. But otherwise, other things equal, you would expect a growing differential in terms of the tax rate to increase those sorts of behaviours. But as we've already said, this is against the backdrop of actually net migration to Scotland. So it's not a question of migration falling, it's perhaps migration not as high as it otherwise would have been. So I think those are important caveats to bear in mind on this.
Yes, I get that. I mean, the figures show there has been net migration to Scotland, but in your paper, because of the tax difference, you're saying that actually there's been a loss in financially.
So if there had been no divergence in rates, there would have been even higher migration to Scotland, would be the sort of the simple way of putting it.
And more money.
Yes.
So the conclusion for that would be, if you widen the gap, the tax gap, then potentially even fewer people come and the money goes down even further.
So that would be where you would want to do this on a, you know, as Alison has said, this is still relatively new. This is our first data point in this. You will want to keep it under evaluation. And as I said, the Scottish Fiscal Commission already built that assumption, or an assumption for behavioural response, including migration, into their forecast. So that should already be within the numbers, but we will only know in retrospect whether that's a good estimate once we've got all the data and are able to do a more complete evaluation. But you know, other things equal, you're right. Higher taxes will have a stronger behavioural effect than a lower tax rate.
Okay, that's very useful. I'll ask you about something else then. Self-assessment. So I'm somebody, I'd hate filling in forms, any kind of forms. I don't know why you would fill in a form if you don't have to do it. But anyway, we do have a number of people on PAYE who are filling in self-assessment forms, even though they don't have to. They perhaps don't realise that they don't have to. Now, according to the Auditor General, no taxpayers have paid the incorrect tax as a result of that. But this led to HMRC overstating the Scottish income tax outturn by an average of 78 million a year. It's calculated that the Scottish budget should have undergone a further negative reconciliation of £29 million as a result of this issue. So have any decisions been made on how to account for the £29 million potential reduction to the Scottish budget?
So firstly, I'm sorry for the error that was made. I said it was a statistical error, and as I hinted at earlier, we do have a challenge of sometimes bringing data together from different systems. In this case, it was a statistical challenge that we faced. But in terms, and we've been open and transparent with the Scottish Government, with the auditors about this. But the question on what happens to that 29 million is really a question, I think, between the Scottish Government and the UK Treasury. So I might hand that over to Alison if I can.
And just to say, discussions are ongoing, and obviously we expect it to be resolved.
To be resolved? When?
Well, as soon as it is, I will write to the committee. That's probably the best thing to say.
Okay, all right. Well, we'll move on from that then. Now, let's talk about S-codes. You don't have to tell HMRC where you live for some reason. Do you think that it should be a legal requirement to tell HMRC where you actually live, given that we've got this tax divergence?
I think at the moment the case is not there for a change in that. You know, looking at the data we have, we think our address data, often provided through employers. Some people do automatically report to us when they change address. That actually that is working well. You know, yes, there are some challenges, there will be some issues, but in general that is working well. The challenge when we put a new requirement on people to tell us is we then have to put in place sanctions. Simply having a requirement to do something without any sanctions doesn't seem particularly helpful. So you'd have to have sanctions on that, and that would create, I think, you know, uncertainty. I'm certain as MSPs, you would be concerned with constituents who would be approaching you concerned about penalties they may have incurred for not telling us about an address move. If it's an address move in Scotland, for example, that would have no impact on their return. So we would have to think quite carefully about whether it's proportionate to do that. At the moment, we don't see that as being proportionate. But again, in the future, you know, things could change. The other aspect of this is kind of, are there other ways in which we can get, you know, data from individuals, asking people to report to us. As you say, people don't like filling out forms. If there are other ways in which we can collect that data from other records that government holds, that would always be a priority for us. So I think we're probably a long away from that, either because it's not, you know, would be unduly burdensome, or because actually we can get data in other ways from other parts of government. Many, you know, citizens see government as, you know, they will not see the difference between HMRC and other parts of government. They think they've told government you should be sharing that data. So there is I think a sort of burden on us to make certain we're exploring all those opportunities to, again, for the citizen to try and make things as simple and straightforward as possible.
Okay, but where you live is important, because if I'm a bad example because I'm an MSP, but if I wasn't an MSP and I moved to Carlisle,
yeah,
then I would pay less tax.
Yes.
So, you know, where I live is important.
Yes, it is, and as I said, in particular, you know, at the moment it's Scotland and the rest of the UK. You know, the Welsh Assembly has, the Senedd, has the power to vary its income tax rate. So we could end up with address being more important across the UK in terms of the operation of the income tax system. So I agree with that. I think at the moment, as I said, because we are seeing high confidence in our address matching, it would not be the right time to move to increase the burdens on taxpayers in terms of reporting to us. But again, this is something where we need to be alive to. It doesn't mean, just because that's the situation at the moment, doesn't mean it will always be so. And maybe there are changes we need to make. But I think if we were to want to introduce legislation such as that, I think we would need to have very good evidence about why it's a proportionate response to a problem.
Okay. You wrote to the committee. It was a very useful letter, March the 11th, and you addressed the issue of employers not applying S-codes. It's a small number of employers, but you do say in the letter that there are two. You obviously don't say who they are, but there are two employers who are consistently getting it wrong.
Yeah.
I wonder if you could tell us, what kind of. I'm not asking you to name them because you wouldn't name them, but what's the kind of size of companies are these? Why are they getting it wrong? You did mention in your letter some software, and are they now getting it right?
So we will find out if they are getting it right. We'll write and let you know how that changes. And I might bring in Phil to talk a little bit more about this. But the beginning point is that we expect all employers to operate the PAYE system. Tax codes have been a long-standing part of our system. We now, since devolution, have S codes and C codes in Wales as well, and we do expect employers to operate those effectively. The challenge we find, and this is again, different employers have very different payroll systems. So if I could just allow me to sort of elaborate, some of the most modern businesses will have cloud-based systems. They are very easy to change. All the calculations are done in the cloud. Other people have what we call on-premises systems, where if you are improving the system, you actually have to have people taking disks to the employer and installing things. So sometimes it may well be that they've got old systems that are not really delivering on that. There's no real benefit to an employer from not operating an S code. So we don't think there's any deliberate decision here. It may simply be that people are using old systems or have not really updated their systems recently. But Phil, did you want to say any more on S codes?
Yeah, certainly, and thanks for the committee's interest in this topic. I think it's helped to keep us straight in terms of it's been a topic we've regularly reviewed at our Scottish Income Tax Board meetings. So we did commission some additional research when we haven't sort of finalised the report there, but we'll be very happy to share it. The sort of initial sort of findings we've got are that the mistakes are fairly evenly split between large, medium and small employers, so it's fairly broad across the range. Largely, we think at those earning less than 43,000, but again, we need to do a little bit more work to see whether that's kind of disproportionately affecting those groups. We think that the best performing sectors are in health and social work, and we think we've got the most issues in the finance and insurance sectors. So I may confirm or deny anything you may have previously held. As Jonathan mentioned, we have also got granular enough to identify 2 particular employers, so I'll take a sort of personal interest in making sure we get that follow-up done with them, and that we get the right sort of action plan in place to get that resolved. As also mentioned, we can tell which software products are associated with it. So again, another sort of avenue we can investigate now is to go and contact those particular software developers and see whether there's any systematic issues that we can get into. So no, again, thanks for the interest. It's definitely prompted quite a rich field of work to follow up on.
Well, I'm pleased to hear that. But you've identified these two companies which are getting it wrong. They've got software which may be the reason why they're getting it wrong. Have you approached them to say, look, you've got a problem here, it needs to be sorted out?
So we certainly will.
But you haven't yet.
I don't know. We only just got this report in the last kind of couple of weeks. So I depending on the size of the business, I'm sort of keen not to disclose anything. But if it were a larger employer, the way that HMRC is set up is we've got someone called a customer compliance manager who has a sort of close relationship with that large employer, and we'd pursue it through that channel.
But we can report back. Obviously, we cannot disclose the names of the companies, but we can report back to you. We wanted to bring the evidence to you as soon as we could, and in good time for this hearing. So that's kind of why it's kind of hot off the press from our end as much as it is yours. But we will follow up, and we can write back to the committee once we have done those conversations. Obviously, we will need to be careful not to disclose anything, but we will right back to the committee on this. This is an area of work, as I said, that I don't think we're going to stop doing, and this committee can expect regular updates on that work.
No, it's very much appreciated. But I think the potential losers are not the companies, it's the employees. If they're taxed at the wrong rate, you'll end up chasing them, and that's not their fault.
Happen is at the end of the year we'll have something called an end of year reconciliation, and then if you have an underpayment of tax, we will go and say, can you please pay that? If there's an overpayment of tax, we will say, here's the way of reclaiming it. So the cost is that the burden on the individual to then either make a payment, and again, you know, some people, as I said, if they're not operating S codes, they could actually be, you know, because the Scottish rates are lower for some groups of individuals, people could be due a tax repayment, so they're missing out. Obviously, if you're a higher income person and it's not operated, you could end up with a larger bill. So it is the cost here is entirely on the taxpayer in terms of administrative burdens. And again, for some people who are on a tight budget, that could be challenging for them. So you're absolutely right. That is where the cost is. It's on their employees as taxpayers.
So just my final question then on this is, have any Scottish taxpayers received such a bill from you asking them to pay up?
There have been some, but often I think we could tell you the total number of reconciliations in Scotland, but often we're often reconciling a number of things at once. So, for example, if you have bank and building society interest that is taxable, we will often bundle that up in the same calculation. So okay. We can probably tell you about reconciliations in Scotland, but not reconciliations necessarily caused by S codes, because the reconciliation will be getting everything right.
Yes, I appreciate that.
So perhaps we can give you something on reconciliations, but it's tricky to give you S code driven reconciliations.
Just whatever you can tell us.
Yes, I'll go away. Our colleagues can go away and look and see what we can say on that. But as I said, in general, we see most employers operate the S codes well, but there are these small number of areas where there seems to be a persistent problem that we need to tackle.
Okay, thanks, Convener.
Okay, thanks. In the interest of time, I'm going to go straight to Stuart McMillan to put some questions to you. Stuart.
Thank you. I just want to follow up on Graham's question about the S codes. Mr. Athow, you touched upon, used the word sanctions, but you wouldn't need to sanction people, I would assume. Surely, I mean, if it was guidance that was presented, so I think sanctions might be a step too far.
And certainly, you know, that's our last resort with employers, and particularly on S codes. As I said, with S codes, there's no tax at stake overall. As I said, there is there is the inconvenience issue, but it's not that we are seeing the sort of behaviours where people are deliberately trying to not pay over PAYE they've collected. That would be a much more serious issue where sanctions would be involved. So we want to stay away from that. We want to help employers get things right. That is our starting point. And as I said, in this example, all the evidence suggests it is people inadvertently getting it wrong. Maybe they've not updated their systems. Maybe they've not updated themselves with the latest guidance. So the aim here is to educate people rather than levy sanctions. So that would be definitely a long way down the track, and we'd have to have something much more serious to consider that than not operating an S code, because, as I said, that doesn't affect overall tax liabilities. So apologies if I was a little bit unclear on that.
No, that's helpful. Thank you. I mean, that then it does take me on to another follow-up question from one of Colin Beattie's questions earlier, just regarding the IT systems now. Also, I would assume that every IT system for any country is going to be, any kind of tax system is going to be a bespoke system for that country, because obviously tax systems are totally different. But I would assume that yourselves would engage with other countries in terms of their IT systems and the like. Now, with that, are there any kind of good examples that you would then share with others and others would share with yourselves with regards to helping to design a new IT system going forward?
I think there's two things I would highlight. So they're very important in tax collection. One is having data very close to when a transaction arises. So we already have that in PAYE system, and actually the PAYE system is actually, or our current system has actually been copied by other countries. So every time an employee is paid in the UK, we get that information pretty much in real time, and that is a very good system that allows us. That's why we, PAYE, we collect 99% of the tax due because it's very, very secure, and that gives us both the data, but also gives us the money with that. So that's something where that is a very good system. And the closer, as I said, you can get the information, the closer you can get the payment, because again, if you don't get the payment with the information, it can become a debt. So again, that's always our drive there. The self-assessment system is more challenging. We give people, it's sort of 9-10 months after the end of the tax year to complete their return, and that is problematic for us because again, if you've you may have got a tax bill, but you've spent the money in that period. You haven't budgeted for it, and that can be problematic. And also, we're asking people to keep records, particularly self-employed people. We're asking people to keep records, and if we're asking people to keep records, and it's you can have a transaction in April 25 will not need to be recorded, or sorry, not need to be told to us through the self-assessment return until January 27. There's a lot of opportunities for people to get that wrong. So one of the areas we're trying to do, and this is back to my point on making tax digital, is encourage people to keep data on digitally, because digital records are more durable than a piece of paper that can easily be lost, and also to update us on a regular basis. So our aim with the tax system is to try and make it more real time, so we get that data, and then that allows us to understand that. So those are the areas, and if you look across the world, those are the areas that that countries are going on. You build the tax into something somebody's already doing. So with PAYE, everybody has a payroll system. So you build the tax into it. And again, increasingly, businesses are using software. If you're self-employed, people are using software. So you build the tax into that. So that's our strategy that we're trying to move towards, that I think will both help people get things right, because it's automatically built in, but actually works with the grain as well as the way businesses, self-employed people are moving in terms of digital uptake.
Okay, so with that, so that's the quarterly that you spoke about earlier on. So with that, obviously, and you're currently using the kind of third-party checks. So how will that then marry up with the third-party checks?
Again, there's a real spectrum of what things we can do here. So at the moment, we do get some third-party data, and we will sometimes use that for risking. So we will look at all the taxpayers we have, what have they reported to us, and do we have a source of corroboration that either says that was right or was different. So, and that is a key way in which we, for example, will look at small businesses. So we'll say, actually, you've told us this, but your merchant acquirer who looks after all your card payments has said you've got a different income. What's going on here? So sometimes we will do it in that way, but increasingly we want to be able to do things. The jargon is pre-populate. So back to Mr. Simpson's question about form filling, we actually would like to be able to fill the form for you. So if we have Bank and Building Society interest, that should be on your tax return already. So there's less opportunity for you to forget it or not include it. So those are the sorts of things where we would like to do more with data, but we start with this idea of risking, so we can look at which taxpayers are telling us things that are different from where we have third-party data. Now, sometimes that third-party data is wrong, and when you inspect it, it's all fine, there's no tax liability, but sometimes it does give us an insight into what's going on where there's non-compliance.
Okay, so then bringing it back to Scotland, and the also kind of tax collection. Can I, once again, with regards to talking to engaging with other countries, particularly somewhere like Germany, where also the federal system with the lender and a range of kind of local taxes that lender will have, and also you could argue Spain as well, of course. So the fact that there have been kind of use Germany as an example. So you like the lender, they will have a kind of a federal system, kind of no doubt similar to yourselves, kind of overarching system with a kind of local taxation that's then potentially also kind of fed in. Are there lessons that we could learn from there with regards to the divergence of taxation that will take place?
So I think you will see different international experiences. I'm mainly focused on the administration of it, and I think a lot of the administrative systems tend to be quite similar in terms of how that operates. But in terms of, if you're looking at tax policy variation, I'm less cited on that. Of course, the United States would always be an example of where there is, significant variation. And again, you have three levels of tax, often three levels of taxation there: a federal, a state, and maybe a local government level. So again, you will see different models. Part of the challenge, I think, in some of these countries, and the US is a good example, is sometimes the more variation you allow, you sometimes end up having to put more people into self-assessment. The US basically has they don't call it this, but essentially has a 100% self-assessment system. So there are going to be challenges in that. Now, the UK has always had we've always tried to keep people in PAYE as far as possible. So there will be some challenges around administration. The more degrees of freedom there is in taxation, the more sometimes the challenges will be around the administration and the administrative burdens, such as more self-assessment. We're always trying to take people out of self-assessment where they don't need to be. It can be, it's an obligation for people to undertake. Again, they can face penalties if they don't comply. And the self-assessment system costs us more to operate than the PAYE system as well. So we're always trying to look for administrative simplifications, but sometimes there's a trade-off between policy flexibility and administrative simplification.
But certainly in terms of the policy decision making, clearly that happens at the political level. But in terms of the actual implementation and the tax gathering, designing a system and also flexibilities in the systems, with the advancement certainly of IT, and also there have been huge changes in IT over the last 3 decades, but in particular. Systems could have that flexibility inbuilt, particularly if there's going to be kind of new systems to come on stream.
They could do. One of the issues that's sometimes sort of overlooked is actually the data infrastructure for this. So, some countries have things called like digital identities, where again all the information in government can be brought around you. The UK doesn't have that arrangement that makes that difficult. So sometimes, yes, the technology's there, but how do we know Stuart Macmillan is that Stuart Macmillan, and we should be putting your tax record, this income information against your tax record. Those sorts of things can be very, very difficult to do. So sometimes it's not the technology but the data infrastructure, and again that is very different between different countries. If you would go to the Nordics, they tend to have much more digital identities. They have a history of identity cards and those sorts of things. They have a population register. Back to Mr. Simpson's point, you are obliged to say where you are living to the authorities, and if you move, you're obliged to do that. So there are sometimes different cultures around data and those sorts of things which also affect, and sometimes can be more important than the technology in terms of what you can do in terms of exactly those sorts of things of joining up the data behind the scenes.
Okay, just finally, if there were to be a drive to get to that type of data technology, would that then provide ourselves with the opportunity of not needing to then use third-party checks in that process?
I think, yes, if we could get better data, we would be less dependent on third-party checks. But third-party data is always going to be useful. There will always be things, that we will not know. Essentially, the self-assessment system is there to cater for things that we do not have data on. We have data on employees, so we don't collect that data. So there will always be things we don't know. The question is, can we bring that data in behind the scenes so the taxpayer doesn't need to know we have that data, but they can be assured that we're getting the data, using it securely, and giving them the right tax bill. So that is definitely the direction of travel we would like to do. We're always thinking about how we consult and build the case for that, because again, we also know that data and data privacy is an issue that we need to be very alive to, and we need to make certain we're not sort of ahead of public appetite for data sharing.
Okay, no, thank you. Thank you, Convener.
Thank you very much indeed. I'm now going to turn to the Deputy Convener to ask the final round of questions that we've got for you this morning. So, Jamie Green, over to you.
Thank you, Convener. Good morning. I'd like to start by looking at an area of the report which we haven't covered, and that's Scotland's overall economic performance relative to the rest of the United Kingdom. For your information, this sits roughly pages 19 to 23 of the AGS report. That's helpful. Let's start with the Scottish Government. Can we have a look at Exhibit 3, the table here, and perhaps you can talk me through this table. According to the Auditor General, between the years 2017 and 2023, the cumulative additional tax paid by Scottish taxpayers due to tax policy differences was £3.36 billion in additional tax paid, but not far away from that figure is the net increase to the Scottish budget, which shows a figure of only £629 million. Why is that the case?
So tax policy differences are raising more funds for Scotland because we have a more progressive tax income system as well. The first thing I'd want to say is that actually all the income tax that's raised in Scotland comes to Scotland and goes towards the Scottish budget. So I think these are really important elements. So what's happening here, and allow me therefore to break down what's happening with the numbers. And there's three key elements. And I'll go through those in turn. Behaviours, distributional differences, and residual elements. So the 3.367 that you mentioned as the cumulative over those 6 years, described as additional tax paid, is not actually additional tax paid, because actually when the Scottish Fiscal Commission set out their forecasts for tax in a particular budget year, they do take into account behavioural effects such that the actual tax figure that we build into our budget in each year has been reduced for the expected behavioural effects, because behavioural effects will happen in all different tax systems depending on how tax rates are set. So what I would say is, first off, that figure is not actually additional tax paid. And those behavioural effects are accounted for in these forecasts by the Scottish Fiscal Commission each year. For the purposes of looking at this table here in Exhibit 3, the analysis that we've done is actually saying that those behavioural responses that would then be taken into account each year by the Scottish Fiscal Commission, our assessment of the behavioural responses over that period included in that number is 0.6 billion. So when you start to take into account then what is on the middle row of that adjustment that is illustrated here of the 2738, 0.6 of that actually is behavioural, and it is already taken into account in the figures that we calculate and use based on the Scottish Fiscal Commission forecast in our budgets.
Okay.
So that's already taken into account.
That's a very long answer, but it hasn't answered my question. So you're using completely different language to what's in the Audit Scotland report. I can only use the language that the Auditor General is using. So I appreciate you're trying to explain the question.
So there's two other elements.
But no, sorry. It says additional tax paid due to tax policy differences, £3.367 billion. You're saying that's not additional tax paid due to tax differences. So either you're correct or the Auditor General's correct. I'm not sure which.
Okay, so I'm actually saying that that figure wasn't actually calculated as tax to be paid in any of the policies, because when the Scottish Fiscal Commission do their forecasts, within that middle number are three elements. behaviours one, distributional differences are another, and residual elements.
What do you mean behaviour? Sorry, I'm just trying to get my head around this. It's not a trick question, by the way. I'm just trying to understand the table.
I mean, I think I might be able to help here. So I think that top line is what the extra tax would have been if taxpayers had not have changed, had continued with the same economic activity as they otherwise would have had. So there was no behavioural assessment in here. So this is saying if tax, as my understanding from what Alison was saying, is this is kind of what taxpayers would have paid if they'd not changed their behaviour, carried on exactly as they were before.
Okay.
But with any tax change, you will see people changing their behaviour. You know, that can be a variety of things. As I said, it could be things like people retiring early. It could be people taking advantage of tax planning, those sorts of things. As I understand it, that is not included in that figure.
Okay.
That would be part of the line below, I think, is what I'm understanding.
That's helpful. Okay.
Thanks, Jonathan.
That's really helpful, actually.
Yeah, so that's exactly the case in terms of those behavioural elements.
Yeah.
So, and that's why I say the tax isn't actually paid. That's why I'm saying it's not tax paid, but it is what the potential, I suppose, is another, trying to find another word that is linking the languages together.
Yeah, well, so that's interesting. I mean, doesn't that demonstrate, though, that the potential tax income that could have been achieved through divergence is £3.36 billion? That's sort of what that table is saying. It's not saying what was actually paid, but it's saying that was the maximum potential. But then the bottom line is that the £0.6 billion is what we actually got in extra revenue from the differential. So to me, there's still that's only 20% of the overall, you know, the 3.3 billion. So I'm trying to get my head around what is this? Where's this 80% loss happening?
So there's the difference around behaviours, which happens with all tax policies, where it's taken into account that there will be a behavioural reaction tax planning in the way that Jonathan's described. And so any tax figure that's set out in our budgets in any budget year has already, because the Scottish Fiscal Commission do this, take into account that people will change some of their tax planning for those that have the means to do that. So within that middle column, therefore, or middle row to be more specific, what's being described as economic performances actually isn't economic performances alone, it's behavioural as well. So within that number is behavioural responses, which the SFC take into account and say we will already have that adjusted in our forecasts. When we go into the other elements then,
Isn't that not a source of concern to you, though, that 80% of the potential tax that could be achieved through a different tax policy in Scotland is being lost to behavioural changes? Now, you mentioned some of them. Tax planning was one, early retirement.
So so just to be really specific on the proportions, 0.6 billion of the 3.367.
What's that as a percentage? Roughly. I mean, it's not 80%, is it?
No.
It's 15-20%, right, is due to behavioural factors.
Yes.
So the rest is due to things like the fiscal framework and so on, isn't it?
So the rest of it is then how the block grant is adjusted. Because obviously, when we're raising income tax, and I said the figure for, if we use the 22-23 year, then I'll let me work still with the cumulative, because obviously that's, you were saying, let's use what we've got on the page here. So put the behavioural to one side, and that is accounted for right at the outset when budgets are being set. Then the convener is absolutely right. This is then where the block grant adjustment comes in, because if we're raising, and next year we'll be raising 20.5 billion from income tax, then the block grant has to be reduced because of the fact that we are raising tax here in Scotland, and we've moved away from the old system before there was any income tax raised here in Scotland. So the block grant has to be adjusted. And the block grant adjustment will take into account the things that are to do with what we would call distributional differences. So let me unpack what that's about. So distributional differences talk to where there are different sectors in the economy and the way that the distribution of earners sit across the UK. So the rest of the UK has a relatively higher proportion of very high earners. So that means that even if earnings were growing at a broadly similar rate overall in Scotland and the rest of the UK, we would see some differential, and that has to be taken into account. And these are due to what you would call structural differences in the two economies. Some of those structural differences are sectors as well as regions. So let me give you some examples. I think this would illuminate it a lot more. So there are financial services. The financial services industry operates both in Scotland and in the rest of the UK. But it's the composition of that sector that actually plays out in these distributional differences that are adjusted in the block grant adjustment. So there is a concentration of financial services in London, and that means the rest of the UK raises substantially more of its tax from that sector than in Scotland. So let me bring out the differences. The very high earners, and this is the very specific thing about very, very high earners, those will be the ones working in investment banking, investment management, financial trading. That has that concentration around London and the South East. If you contrast that with the nature of financial services here in Scotland, well, that's where Scotland has more of an emphasis on pensions and insurance. So so we still have those service sectors, but as you can tell, the London and the South East factor, with those very, very high earners, with the bonuses that go with it, actually do start to bring out a distributional difference in our economy and how that plays out into the block grant adjustment. And those are some of the really key elements in that distributional element. And
so
that,
just in the interest of time,
yeah.
I know it's been a long session already, but I mean the premise of my questions are around economic performance differentials in Scotland. So what I'm hearing is that, of course, the economy in London is different to Edinburgh. Okay, we understand that, we accept that. We understand that the block grant adjustments do alter the amount of money you get, and that different regions of the UK, for example, will have different economic activities. But I'm trying to understand the bigger picture, which are there issues, and this is what the Audit Scotland report highlighted, is an underwhelming economic performance in Scotland relative to the rest of the UK, affecting how much money the Scottish Government has to spend. And that's the underlining point that I'm making in the original question. Again, it's not a trick question, I'm just using the data in front of me.
Yeah.
Let's look at this financial year, because the SFC has done some work on the 25-26 forecast. It estimates, let me get the number, £1.676 billion in additional revenue will be generated through a tax divergence in Scotland, which is great. I'm sure the government will say that's bringing in extra money. However, they forecast that will only result in a net £837 million of cash to the Scottish Government. So that's about half. Again, it goes back to this point. Are Scottish taxpayers paying more in tax, but that's not generating the same amounts of money for the government to spend in public services that we all want to see it do so, because of relative economic performance differences between Scotland and the rest of the UK?
So it's the key thing to focus on is actually around earnings growth and these distributional factors. So it's not about the economic performance per se, but it is about these structural distributional differences where there are very high earners and as you look at the distribution of how much tax comes from the very high earning proportion of taxpayers, and that's definitely the case for our UK. There's an even larger proportion of the total tax take that comes from these very high earners. That's a larger proportion for our UK, and it is skewed by these very factors in our economy where the very, very high earners are actually concentrated in London and the South East.
But we have high earners too. 0.8% of all Scottish taxpayers pay 18% of all Scottish tax. So we already have a significant small group of people paying a huge amount of tax. So surely the ambition of government shouldn't be to increase that.
Yeah, so that equivalent number, your 0.8% that you've used for Scottish income tax, as the proportion of taxpayers is actually 1.6% when you look at our UK. And so that's why I'm saying there's a structural skewing, and it is to do with these sectoral differences. Earnings growth, though, which is a really important factor in here, is growing faster here in Scotland than it is in the rest of the UK. That's certainly the case that we've seen with outturn figures, that we've seen that for 2 years in a row. Part of the issue with the block grant adjustment is that it's using not only the evidence from Scotland and the assessments by the Scottish Fiscal Commission, but it's also using it from the OBR as well. And the Scottish Fiscal Commission has been predicting, projecting, forecasting earnings growth in Scotland at a faster rate. The OBR actually was predicting those same equivalent earnings growths in the rest of the UK much slower, and it is now catching up and saying actually it's going to be a bit faster in the rest of the UK. So we're seeing the interface of two different forecasters at different points in time making their assessments. But this isn't about the performance of the economy. I think this is where the labelling of this isn't the most helpful. But it is about those distributional elements and the sectors and the nature of the economy, the structural nature of the economy. But we are seeing much faster earnings growth, even with the OBR restating their numbers. We're seeing faster earnings growth here in Scotland.
Yeah, and just to be clear, this isn't a race to the bottom. I don't want other parts of the UK to be performing relatively poor to Scotland just so that we can say we're doing better. I want it to be true, and I'm sure we all do, that every extra penny spent on additional taxes in Scotland creates more opportunity for the Scottish Government to spend money on public services.
Absolutely.
That's got to surely be a shared ambition. But what we're trying to unearth through these sessions is what is causing that difference. Why is it the case that for every pound in additional tax that is spent, what percentage of that is actually achieving a net benefit to government? And it's trying to unearth some of that. For example, if you look at Scottish GDP per capita and compare that to the rest of the UK, over a long period of time that was consistently lower. If you look at higher levels of economic inactivity in the working age population, again that's been higher in Scotland than other parts of the UK. And of course Scotland's working age population is growing more slowly than the rest of the UK. Again, that's an SFC analysis from last year. So, there are a number of factors. You've picked out a couple where there's some improvements, and I'm happy to hear that. But there are other areas where there clearly are some major factors which are not producing the sort of economic performance that we need to see to make sure that all that tax money comes back to the Scottish Government.
The key thing is that clearly Scotland is continuing to play to its strengths. So we've been drawing out the distributional differences, but Scotland has absolutely been playing to its strengths. There are areas where you will see, and you've mentioned next year's budget, but there's a range of policies where there's work to increase not only the numbers in employment, but those in employment increasing their hours or their earnings increasing. And there are particular areas that we are making investments in. So 200 million into the Scottish National Investment Bank to support innovation and attract investment. There's a near tripling of investment that's going into offshore wind. And that obviously is an area where there's a differential in economic potential that we can be bringing out here in Scotland. And so that will be really important there. We're continuing to obviously invest in enterprise agencies. And also there's investment in entrepreneurs, because that point about enabling people to continue to be going through their earnings ceilings to be able to then be paying in the higher rates. The other thing, I suppose, is around our relative competitiveness overall. So what we're saying is, despite the ongoing headwinds that we're seeing globally in the economy, we've seen a continued improvement in Scotland's inward investment performance. Ernst & Young's annual attractiveness survey is still showing us as being our performance within the UK and Europe very much in that securing 14.4% share of the UK FDI project, so more than the proportion of our population would suggest.
That's good. And you mentioned, I think it was one of the earlier question sessions, that the Fraser of Islander Institute, who do some good independent analysis. And I got the impression that you suggested that the research you'd done on tax divergence seemed to demonstrate that it's really having no effect on behaviours, or very little effect. Is that the government's position?
So I think one of the really important things, actually, that we've not mentioned today is that people make choices about where they live beyond just whatever happens to be the prevailing tax rate, whether that's a national one or a local one. And so I think that is really one important thing for us to log, that it's not just tax. What we are seeing is through the most recent migration information is that we are seeing actually a net positive migration into Scotland, actually across all tax bands. Yes, there was the study that showed there was the issue that Mr Simpson mentioned in the higher rate for 1 year in 2018-19. But in the most recent data for every year and for 21-22, all tax bands have seen net positive migration. And the overall net position is that the tax revenues from that have been positive over the period. So there has been some swings and roundabouts. But we will continue to look at the studies. It's really important we do. That's the whole reason why the tax strategy has said, right, we have these areas of research interest. We are still relatively new by the time you start to see the outturn data, bearing in mind we're sitting here in April 2025, getting assurances about outturn data that was for 2022-23 from the National Audit Office. There is a lag. We'll continue to get that data and we'll continue to evaluate it. I think that's the really important message, I would say, is the government's position on this.
What's the government's position then on the Scottish Business Monitor that the Fraser of Islander does? I presume you've read that as part of your analysis of tax behaviour. Their last quarterly report, when asking Scottish businesses what they felt, 34% reported a fair amount or significant effect that tax divergence was having on their business, which included their ability to recruit and retain people, demands on wage pressures, and an overall perception of Scotland's competitiveness and investment, inward investment. That was significantly higher in particular sectors. You talked about the financial sector. Well, let's look at the construction sector, where nearly a third of businesses say that higher taxes had a significant effect on their ability to recruit and retain people in Scotland.
So I think I would point to the work that went into the tax strategy. The government does stay alive and listen to the various contributions that are coming through, whether it's particular studies. What you're saying there is obviously data that's collected in terms of experiential data. The data that I've been referring to today is the ones that have been done on the basis of analytical review post-event. When we are shaping and putting advice to ministers around tax policies, it's fair to say that the team will draw on the full range of data that's available. And I think that's the thing that I would assure this committee on, both in terms of policy development. The government has been clear about its progressive tax policies, but at the same time stays alive to the fact that, and as you will see from the Times article at the weekend, the extent to which the Scottish Government is being seen, again, subjective, as listening to business is actually higher than the rest of the UK. So I think the key thing is that both in the administration and working with HMRC in the correct collection of Scottish income tax and in setting policies for the future, as well as evaluating the ones that were done, we will continue to be vigilant in seeing the evaluation data from wherever the sources may be.
Okay, and this is perhaps my last question in the interest of time. HMRC, you can't get away lightly from this session. I want to turn to page 23 of the Auditor General's report. I was quite struck by a piece of commentary about migration trends and tax policy, and I wondered if you could comment on it. It's paragraph 80, where it was stated, the HMRC says it cannot draw conclusions about whether migration trends were affected by income tax policy, as it does not know what level of migration would have been expected without any divergence in tax policy. But surely isn't that a fundamental flaw in analysis of tax divergence? I mean, how can the Scottish Government make appropriate decisions about tax divergence if it doesn't not know what effect it's having on inward or outward migration?
So there's two elements to this. Firstly, we have done some more historic data looking at that, and we have now set up a database that will allow us to understand what is happening with migration. The challenge with that is always what would have happened if you'd have not had the divergence. So you're always, to use the jargon, you're always estimating a counterfactual, what would have otherwise happened. And that can be done analytically, but is often quite complex to do. It was done, as I said, for the 2018-2019 study, where, as I said, it was migration, net migration was still positive, but was lower than it otherwise would have been. So this work can be done. It just does not automatically fall out of our statistics and data. It requires careful analysis. Analysis doesn't always have to be done by us. People like the Fraser Allender, are able to do that analysis as well. So there's something there. But also the Scottish Fiscal Commission does assume an overall, this taxable income elasticity, that will include migration effects. But it has one assumption for all of the behavioural change, whether it's migration or other things, when it's making decisions. So that is factored in. You just can't separate it out as an assumption. Now, over time, we might get better data that will allow us to do that more effectively. But again, with the lags in the system, it does take some time before we can get all that evidence. But this is going to be an area, I think, of interesting research. I think if you are an external academic, this is a rich source of data to do exactly that sort of analysis you're talking about.
Good. Data is key. That's great.
Yeah, the data is
absolutely
key. Yeah.
Thank you very much for that answer. Thanks, Convener.
OK, thanks very much indeed. It's been quite a long session, and can I thank our four witnesses for their attempts to answer our questions. And we are, I think, at a point where you've committed to giving us a bit more information as and when it's available, and a bit more of your analysis as and when it's available, and we very much welcome that. We may need to follow up a little bit more into our conversation about Exhibit 3 in the Audit Scotland report, and the terminology and what is and isn't meant by different rows and columns in that presentation. So there have been, I think, some really useful points of discussion this morning. Some things I think we will want to follow up as a committee. But can I again echo remarks made by other members of the committee that we very much appreciate that you've paid heed to some of our areas of interest in previous years, particularly, for example, where there has been a failure by employers to properly comply with the S-code requirements and what the profile of those employers looks like. So we very much encourage you to keep on working on that. So can I draw this morning's public session to a close by thanking Alison Stafford and Lorraine King from the Scottish Government, Jonathan Athau and Phil Batchelor from HMRC. Thank you very much indeed. We will now go into private session.